Hello, debt warriors, and welcome back to another episode of Millennial Debt Domination. I'm your host, Katie O'Shea. It's December, which means the new year is just around the corner, and so is tax season. That's right, filing officially kicks off in late January, so now is the perfect time to start organizing your tax documents and getting prepared. To help us get ahead of the game, I'm joined by George Dimov. George is a CPA with over 20 years of experience in accounting and consulting across a wide range of industries. He's also the president of Dimov Tax Specialists, a firm that offers personalized CPA services for both individuals and businesses. In this episode, George and I will cover what documents you need to file your taxes, the most common filing mistakes to avoid, how to spot tax-related scams, and so much more. Let's dive into my conversation with George. Hi, George. Thank you so much for joining me on the podcast today.
Thank you so much.
We're going to talk about preparing for tax season and everything all the listeners need to know about tax season. So to get started, can you give us a quick overview of what tax season is and why it's important for everyone, especially the younger generations, to be prepared?
That's a great question. So the tax season is the period of time, usually between January and April, where people focus on tax. And you'll notice people really think about taxes only one time in the year. And it's around the time when they've received their W-2s. And so this is something that I've seen people, it's kind of out of sight, out of mind. When they have their W-2s, when they have their 1099s, when they have their documents, they're thinking about taxes. But the rest of the year, they're not. And there's one important thing that I'd love to mention about tax season. Tax season is best handled outside of tax season. And this is going to sound crazy, but when is the best time to really plan is your mid-year. Why is that? It sounds like a crazy thing to say because people will think, I don't have any of my documentation. What can I possibly think about tax? But this is really the point in time where the tax planning happens that makes your tax season a successful one. And when I say successful, I mean legally not overpaying taxes, or an unsuccessful one. And what does that mean? That means overpaying in taxes in situations where you shouldn't have. So it's extremely critical mid-year, speaking with your professional, am I going to overpay taxes? What can I do now to minimize my taxes legally? So that's a great question.
For someone filing taxes for the first time, like many of our young listeners might be, what are the key documents and information they need to gather?
The focus here is how do you most efficiently do your tax, and what documents should you really focus on is if you're a wage earner, you need to focus on your W-2, but very importantly, especially if you're looking to save for retirement, take a look at your retirement plan, your 401k. Okay, and this isn't necessarily a document that's going to come in because your 401k deduction is going to be shown on your W-2. So there's no specific separate document unless you were drawing from there. But you want to make sure that you're maximizing your 401k. And this is on your W-2. And I see especially younger people do this all the time where it's already the end of the year and they say, what can I do to make sure that I've saved tax? And I say, well, first of all, did you use all of your employer's W-2, 401k threshold? And oftentimes they say, no, I just put the 10, 11% of my paycheck. And I say, well, look, there's over $20,000 worth of deductions and tax savings that you can have just by putting in your 401k. And oftentimes for these younger generation, that's the single biggest tax deduction that you can have is your 401k. And especially our younger generation clients and listeners don't always take advantage of this. Please, please, please. And this is another reason why you should focus on this now. People realize this around November and December, but by then it's too late to catch up to that 401k oftentimes. So speak with HR or your payroll department right now to do that.
So wondering if should they have any of their student loan information? Is that important for them when they're filing?
Correct. There are student loan deductions. That's your 1098 form. Okay, and there are your for taking credits for education expenses. So you want to make sure you have all related 1098s having to do with education. Correct.
And then what are the main options we have for filing our taxes?
The main options for filing taxes are going to be you can use an online service, okay? Then you can also use a friend that is an accountant that knows their taxes, or you can hire a professional, okay? And this is what I see most people do. Many people I've seen, especially younger people, use an experienced friend or colleague to help them with their tax. If the taxes are too complicated, or if you don't have anybody in your network, then hiring a tax professional is a great idea. And you want to make sure that the person that you hire is a licensed person. And Katie, I have conversations with people all the time, and this isn't even just a younger generation thing where I say, "Oh, you don't have the experience, you should have known better." Nothing to do with that, because I talk to and I meet people in everyday life in their 50s and 60s, and I say, "What kind of license does your accountant have?" They cannot answer that question. They can't answer that question. So please don't get scammed. Okay, there's a lot of services out there that will guarantee massive refund or a massive thing, and if it's too good to be true, it probably is. I say, take a look. Is the person a licensed, certified public accountant? You ask that question. Specifically, ask that question: Is the person a licensed, certified public accountant? Specifically, ask, if not, are you a licensed tax attorney, or are you a licensed IRS enrolled agent? You want to make sure that that person has a license, because there's a regulatory agency that monitors them. If they don't have that and they're just preparing your returns in TurboTax, or if they just have a PTIN, that's not going to be enough. A PTIN, you can get a PTIN online from the IRS. Anybody can, without any specific education. Make sure that they have a qualification from a state or federal licensing board.
Then how can someone know if they should file on their own or with the professional?
That's a great question. If you are getting unexpected results on your taxes, hire a professional for sure. If you are owing a lot of tax, hire a professional for sure. If you are not confident or have many questions, hire a professional. If you have many questions, hire a professional before tax season, because during tax season, we're going to be completely up to our eyeballs in the filing season. So get ahead of that. If you don't trust yourself and don't understand enough about tax and don't want to learn about tax as a side project spending all weekend, hire a professional. Those are the main motives that I see. Not knowing about tax, not wanting to know about tax, not understanding tax, being afraid of mistakes, or getting unexpected results. Those are usually the main 5 reasons that I see people hiring a professional.
Can you explain the difference between a W 2 and a 1099 and how they impact filing?
That's a great question, and it's a very common topic. If you are on 1099, technically, if you're earning income on a 1099 and it's a 1099 NEC, non-employment compensation, okay, that means the IRS actually thinks you're a business. And people get shocked about this all the time. They say, "My employer gave me a 1099." Well, guess what? Your employer is actually your client, and you, my friend, are a business. Now, whether you like it or not, the IRS considers a contractor, okay, or somebody being paid as an employee, but on a 1099, they consider that a business owner. So if you're paid on 1099, the employer is not withholding taxes throughout the year. And that means what can happen is at the end of the year, you have a situation where you haven't budgeted anything for tax liability and you can owe. So unless you planned ahead, unless you took a note of all your deductions, when you're on 1099, you can take deductions against your income. So people that are in 1099, I tell them, make sure, take deductions against your income, make sure to have plan ahead of time. Have bookkeeping. If you're earning enough income, other than just keeping a Google Sheets or an Excel, maybe use something like Zero or QuickBooks to keep a track of your expenses, because that could be the difference between owing $10,000, $20,000, $30,000 and owing a couple $1,000s. So make sure to always take account of that. And if you're on W-2, same thing that I said earlier, make sure you're taking advantage of your 401k. And that's your main difference. W-2 has your taxes withheld. 1099 does not have your taxes withheld. And unless you budget for that, you can be in a jam. So if you're 1099, budget for your possible tax liability.
Not budgeting for that can definitely be like a common mistake maybe people will make. Are there any other common filing mistakes people make?
Missing things. People will file their return and then they say, "I forgot about this." And this happens with younger people more so than anybody else. I see this specifically with younger people, because younger people are still getting their foothold in what they want to do for a career. So it's very common that during these kind of transitionary periods, you have more than one employer. And you have people that also may have interned for their school and earned income from while working at their university, or while in a business not affiliated with the university, may have had a side job, okay, at a restaurant or some, an internship somewhere, and they file their taxes and they realize after, oh, I just got this W-2. What happens now? And you have to amend. That's another situation. It's probably the sixth one that I should have brought up. When the people hire a CPA, when they know after the fact that they messed up. So yes, the biggest common mistake for young people filing their taxes, other than just the general not planning ahead, is filing their tax return and accidentally leaving out something that's relevant. So that's a big one.
Right. How would you suggest maybe my young listeners keep track of all them if they do have multiple side hustles or side jobs? How can we keep track of all this tax information for these jobs?
Make yourself a Google Drive folder. Make yourself a Google Drive folder or a Dropbox or Box or whatever software you like. Make sure that you have a folder for them on that folder, and where you have this where you have all of their information kept track of. Okay, so drop in all your files there. Maybe even keep a Google Doc that shows a timeline of where you work throughout the year. That way, at the end of the year, come November, December, you start preparing your files. Oh, I need to watch out that I have all these, because it can get confusing. I've changed jobs as a younger person. I've changed jobs before, and I know all about this.
Are there any frequent errors that could delay your refund or even trigger an audit?
Absolutely. The big one that I mentioned about forgetting something is probably the top one, that will delay things. And if you have to file an amended return, another big one is if you file on paper for whatever reason. And this kind of goes back to the topic that I mentioned before about making sure, can your tax preparer, other than asking, is your tax preparer licensed by any federal or state board? Should always ask, can your tax preparer file your returns electronically? Because there's people that don't have e-file access, that are doing tax returns on paper, and that will delay things. The IRS has made announcements before that they have millions of tax returns still in process with them. So how do you want to be number 101 million in line? It's not fun. So that will delay things. So absolutely, try to e-file. I'd say that's the number one single biggest thing that you can do outside of make sure your tax returns are correct.
So definitely try to electronically file. That makes sense.
Correct.
So, how can someone avoid missing out on tax credits or deductions they might qualify for?
Biggest one is planning ahead. Make sure that whoever you hire for your taxes, and many people in the tax industry are do tax prep, and you want to I wouldn't say avoid, but I'd say make sure that the person that is doing your tax prep, that you interview them to make sure that they can also provide you guidance, because the biggest I'd say the biggest value out of your accounting professional isn't that they can just prepare your returns. I mean, that's a big deal to make sure that they're prepared accurately. But I'd say the biggest thing is, can they provide you proactive advice to save you tax ahead of time? And so interview whoever you're going to hire, interview to make sure that they know how they can actually help you proactively, and not just doing your returns, also to proactively help.
Earlier, we talked about the Google Drive and the Google Sheets and stuff to help the listeners stay organized. Is there any other ways that we could stay organized throughout the year so it's not such a scramble when it's January, February, March?
This pertains more towards taxpayers that are on 1099. If you're on 1099, okay, you want to at least do some research on ChatGPT or on Google, or by speaking with a friend that has accounting experience, or your uncle or your father, somebody that has tax accounting filing experience. Okay, because if you're on 1099, the deductions that you take, okay, I get a lot of confusion at the end of the year for first-time filers, or even ones that have been filing for many years, that say, I don't know what I can deduct. And this is the major pain point. It's a major point of confusion. So I'd say your biggest thing to plan throughout the year is to take note of deductions that you can take against your income. Because I see so many people come at the end of the year and we say, okay, where are your deductions? And they say, huh? How do I find those? And then I tell them, and they really get in this panic of, oh my God, I have to review all my credit card statements. I have to review all my bank statements. And if you have two credit cards and two checking accounts, that's 12 months times four accounts that you're looking through. How much can I deduct this? What's this? Do I even know if I can deduct it? And what happens is analysis paralysis. They don't get it done in time. And if you don't get it done in time, especially if you're in 1099, you can get a penalty.
We have seen an increase in tax related scams lately. What are some red flags to watch out for?
Use somebody that is trusted, that's been given by your referral network. Don't just use the person that you find online or on Reddit. I've seen, and we're on Reddit, so you can find us actually on Reddit. We provide a lot of Q&A on Reddit, so you can always actually ask us questions that we're happy to help. But the and we're on Twitter, we're on Instagram, so you can always reach out to us there. But use somebody that you didn't just find on social media somewhere. And with Instagram and TikTok being huge for people looking for anything, whether it's vacation ideas or professionals, make sure it's somebody vetted. And there's nothing like having a personal recommendation of somebody that that's used that person, and or asking the person for some referrals. And you'll be able to find the true colors of a practice if you take a look. Do they have an established Google Maps profile? Do they have an established Yelp profile with a year's worth of user accounts? Another thing that people don't know, you can actually contact users on Yelp. And you can obviously, you can contact users on Reddit, but you can even contact users on Yelp. Or if you see a Google review for somebody that's used them, especially if they have an unusual name, you can Google search that, find their LinkedIn, and send them a message and say, "Hey, I see that you worked with this tax professional. Can you tell me more? How did it go?" So I encourage people to do their own grassroots research before hiring somebody, and make sure that that person is coming from either a trusted person that you know from friends or family, or from a trusted colleague, or from even in many young professionals work with in companies such as the big tech firms, have internal chats where people say, "Can you give me an advice for a good accountant?" And that's a great place to ask, because your employee, pardon me, your colleagues at your company, they work the same job, and they might have somebody that's a great fit for you too. So these are all places.
Yeah, I was also going to say there are just some scams going around where it's people claiming to be the IRS contacting you on behalf of your taxes. How can people know if this is real or not? One of those types of scams.
So the text message ones are automatically a scam, and the IRS really won't call or show up at your house in most cases. I've seen the IRS do show up when they are investigating something that is kind of a bigger deal. So the younger audience hopefully is not experiencing that. It's extremely rare, and I'd see it happen maybe only once a year, and we have thousands of clients. And usually it happens to the bigger and older clients. But if you have something approaching you from the IRS, call the IRS at their 1-800 number. Don't talk to anybody over any social media. Don't talk to anybody over the phone. Don't talk to anybody in person. Contact the IRS directly. And something that many people don't know is every area has their own taxpayer assistance center. You can make an in-person appointment, or even just show up there. And you can find the information on Google, and just show up there and work with the IRS themselves. Do not work with somebody that contacts you. Contact the IRS instead. So that's my biggest word of advice.
What's the best way to ensure your information is safe if you do plan to file online?
I'd say use a very reputable online do-it-yourself service if you're going to do it online. And if you're going to use a tax professional or somebody that works online, and we work, I'd say 80 to 90% online, make sure that you vetted them through the steps that I mentioned earlier. So either one of those two options will get you there.
And I just want to actually touch back on, we had talked earlier about kind of side hustles and stuff and people who are self-employed. Is there anything else that the millennials and Gen Zers who have side hustles or they have side businesses, is there anything else they should keep in mind that we didn't touch on when it comes to taxes?
Yes, I'm glad that you asked that. If you are making over 60 to $100,000 a year, okay, and this might seem for a lot for some people, but then we're going to have some very young people, 18, 19, 20 years old, 21 years old, that have online businesses or doing things on social media or in entertainment or in content creation or in subscription websites that are making millions. Okay, and I've seen this before. So when I say 60 to 100,000, I'm going to have some people scoff and say, "Oh, I've been making that per day." And then there's others they're going to say 60 to 100. I'm not that rich. I only make 20,000 on Etsy selling this item. So you can't please everybody. So I'm going to make this for the full spectrum of the audience. I'd say if you're making over 60 to 100,000, start speaking with a professional about taking a look at being a corporation, a subchapter S as in Sam, small business corporation, S as in small business. That can save you a lot in tax. So start looking at that. And especially if you're earning anywhere more than $5,000, $10,000 a year, start looking at some basic bookkeeping. Maybe start doing some research on how that works on ChatGPT or on Google. And if you still have questions, consider booking a time with an accountant. Many accountants will give you a free a 20 to 30-minute call. Okay. But outside of tax season, don't expect that when it's tax season. So book a 20, 30-minute free call with somebody, or the really good ones are oftentimes going to ask for you to pay. So maybe consider paying for a 20 to 30-minute appointment. And crazy thing as it sounds, you might not want to pay for it, but hiring an accountant can oftentimes save you tenfold, 20-fold, 100-fold in taxes later. So it might be worth spending a couple $100 for some good advice.
I definitely wanted to bring that up because this is kind of something new for the younger generations, is that they have all these online businesses and stuff. They might be generating a ton of income and they might not even realize that they have to pay. And I've seen that like people have gotten in trouble like around my age because they didn't know, oh, I have to pay taxes on this, my online side hustles.
Yeah, there's a lot of content, YouTube. There's people that make lots of money on content.
And that's just a side hustle for them. But so they don't think, oh, I don't need to, but you're making a good amount of money. You need to.
Yeah, and one big mistake that comes out of this, and I'm glad you brought this up, Katie, is sometimes people will say, "Well, I made only 5,000 on this, but the props that I used, let's say they're in fashion and they bought clothing or whatever the props are and whatever it is that they did, exceed the cost of how much they made." Sometimes people leave that off their returns because they say, "Oh, I didn't actually earn anything because yes, I made 5,000 from this online platform. Really, my expenses were six." And so they leave it off, thinking that they don't have to report it. And that's when they get an IRS penalty because the IRS doesn't know that you spent 6,000 in expenses. They're only seeing the 5,000 in income. And what ends up happening at that point in time is they get penalized, okay, because the IRS didn't know about the deduction. So you always have to take the deduction on the return. You show the income, but you always have to take the deduction as well.
George, thank you so much for joining me on the podcast today. I think my listeners are going to be well prepared for this upcoming tax season.
Yeah, thank you. We'll provide some information for you and my firm at the end. And any user that has questions for Katie or for me, and I'll do my best to also show it on my social media as well, so everybody on my side knows.
Yeah, where can my listeners follow you? And I'm going to make sure to link everything, of course, in the description of this podcast as well. But if you want to just let them know in general where they could follow you on social media.
Yes, we're on Reddit, we're on Twitter, which is now X, we're on Facebook, we're on Instagram. We're on an email list that provides tax tips and suggestions throughout the year, which is very helpful. So these are all the places, and I'll include those. I'll hand those over to you too, so you know them.
Yeah, great. Of course, I'll include that so everyone can get that information there in the description. But George, thank you again for joining me and providing some great information for my listeners.
Thank you, Katie. You've been amazing. Thank you so much.
Thank you. They say nothing in life is certain except death and taxes. And let's face it, tax season can feel overwhelming. While the April 15th deadline might seem far off, it always sneaks up fast. Expect. That's why it's so important to start gathering your documents early and get ahead of any potential issues or errors. If filing on your own feels intimidating, don't hesitate to reach out to a trusted CPA for help. You don't have to do it alone. The sooner you start, the more in control you'll feel. And with that being said, that wraps up another episode of Millennial Debt Domination. Don't forget to subscribe wherever you're listening. And if you're tuning in on Spotify or Apple Podcasts, please take a moment to rate and review us there. I'll talk to you next time, Millennials, Gen Z, and everyone else tuning in. Bye.